Hey, hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show. We will look at what happened in the market today, learn something from it, and plan for a better trade for the next day. So, we had a bull trap day. The bulls got trapped where the market reversed. Let's see how exactly it happened. What are the details? Straight to the charts. Nifty. Here we have the weekly, the famous resistance which is broken out several weeks back and in late October, and all-time highs were made and complete retracement happened, and since the last 4 weeks we have been consolidating. After the retracement, attempted to bounce several times and still we are stuck at the same place. Let's get into daily charts, but we are more interested in. Look at this. Today what happened? It's very clear from the charts that we are consolidating within a range, and particularly in the last several days it was nothing but very narrow range consolidations. What I'm seeing in both indices, the same story. Multiple attempts to move up, has got hit by the same resistance line, and the same thing happened. That is exactly where the moving average resistance also appeared. And today it tried to move over the previous candle's close, Friday's close, went further ahead and then got hit by the resistance, and then sell-off happened, and then market closed with a wide range bearish candle on both indices. What other things can we infer? We still are in a support zone, a major crucial support zone, the breakout zone that made the all-time high, that ascending wedge from where it dropped out, and that is start falling below that. It's trying to move at the same place for long on both indices. So we have to support. There is change in polarity bounce that could still be possible, but there are negatives that are projecting out. Like you have on the daily, you have a long head and shoulder pattern that's already breached the neckline. There are moving average resistances, and there is a descending wedge that is reversing and trying to move after hitting the resistance. That's all negatives. So basically we closed the market losing 62 points in the Nifty, 200 plus points, 204 points, that's 6.5% on the Banknifty. And intraday it was a trap, and it was a trap, beautiful trap, because it was a gap up, making all the bulls to go along, and then the descent started, went to 1% and 1.5% on the Banknifty, and the gap up that happened earlier was only half of that what it descended. So it's a pure bull trap, and that's what intraday is all about. So moving average resistances, lower low formation of the price action has already happened on the daily charts on both indices, and a new lower low was formed by the breach of 1774 last week, but Banknifty does not happen. The retest is continuing, so technically you can say it's still retesting and then taking this 17,800 support zone very seriously. Any breach of that, any breach in sense a close under that, would indicate more bearishness that could take it to 17,500 kind of levels. So support resistance is 18,000, nearby levels 18,080, 18,000, 18,070, 17,950. So all resistance, confluence of multiple things, Fibonacci as well as rounding number plus previous single highs. In 142 and 262 could be resistance upside after that, which is again previous highs, and that would be the zone where one of the lower high would get breached, and then there is some hope for the bulls. 17,825 downside Fibonacci 50s also. The rounding number 17,800 also actually supported. 17,661 is the previous swing low, and after that 17,642 would be the previous swing low and support zones on the Nifty. And 42,231, 43,63 is always resistance to the upside. For the Banknifty, 45,66, and it's a Fibonacci 23 level as well as the resistance after that. 41,836 and 41,587 are the resistance after that, and 41,587 also Fibonacci retracement 58 levels. That's what the Banknifty we're talking about, right? in and out of these levels, and Bollinger Bands are showing beginning of contraction now. Yesterday was expansion. Day before yesterday is a contraction, so today now again beginning of contraction. So Banknifty shows Bollinger Bands are showing it's a sideways possibility, consolidation, and but Banknifty is showing more bearishness this time on the bands, but the expansion is continuing. Momentum is bearish, but it's, I'm sorry, momentum is not bearish, momentum is sideways and falling. Falling momentum. Banknifty and Nifty both sideways and falling momentum. But there is a volatility divergence on the Bollinger Bands, which is bullish in nature, and there is a bullish divergence of momentum on the daily charts of both indices. That's also, and range shift also is a momentum range shift. That's all. So possibility of a bullish up move or bounce along with the CIP that we are talking about support zone. So those are the positive things, right? Otherwise, momentum is falling. Trend is also bearish, but the bearishness of the trend has reduced. It's falling. Strength of the bearishness as per the ADX is falling. So yeah, trend and momentum are not that great. VIX spiked up again, but it has been moving this journey between 14 and 15 and a half for long. Now the spike rate 4% of spike and close above the 15, which is not exactly the lower regime of VIX anymore. So there's uncertainty in the sentiment analysis. Is what it indicates from the VIX. We just saw showing short build up on Nifty and Banknifty. Options saw showing levels of 17,900 and 18,000. 18,000 is very crucial, and that's for this January 19th weekly expiry. We're talking about 42 and 42,000, 42,000 and 42,500 is where the Banknifty's highest put and call writing resistance, the support and resistance ones are seen at 0.61 and 0.61 is pure sideways. It's neither bullish nor bearish as per the put ratio of the options I for the next expiry. So sideways indication of with bearish bias is what OI is also talking about. Volatility is also talking about uncertainties. Momentum trend is also not that great as we saw, and price action is also not great. Few support zone related divergence possible, breakout possible, bonus of possibilities are still existing. That's all. Now the Fyers was definitely selling today, but the data is coming just now. 750 crores. That's the 17th day of sell-off that has happened. Right? It just came in. It's not updated, so that's the 17th day of selling that has happened. And as usual, the Fyers is buying. That's what held the market from not crashing. So not that great news. The Fyers are not getting. They're not sold that much as they did last week. Definitely, the 17 days without a single day of positive buying has happened from the institution is worrying. Crude oil is falling flat in the trend line zone, and that's rising towards the 80 levels is a concern, right? But it's rising up in the parallel channel. Some flattishness thought indicates as long as it stays below the 90, it should be okay. Dollar index is also flat. Dollar index is also flat. It's been falling. You can clearly see that it's taking its trend line support, and bearish moment is what we have. So that is fine. Dollar index is bearish, is in the short term at least, is good, but still it's not that far away from the 920. Now it's on 2.3, but definitely that's good that the dollar is cooling off. USD is not doing much. Still weak. 81.5 was USD showing, so rupees still not appreciated much, but small gains are there. As of now, sideways momentum, not as bearish for the USD. If that also falls in the bearish momentum, it should be fine. Below 60, below 40. I mean, the gold is spiking up. That must be for some reason, but the markets are jittery, and then there's possibility for uncertainties are there. The market normally gold spikes up. Is it that this time that the gold is spiking? Is going to make an all-time high? You never know. But look at this gold. Gold is spiking up. It's a cup and handle weekly charts that you're seeing, and the moment if it bypasses and hits 2024, or at least if it breaks out with a green close above this parallel channel or a handle part of the cup and handle, then definitely gold can make an all-time high. It's a hedge instrument. Gold spiking is good if you have hedged it. using this commodity, global commodity, right? So that's it. It's just flat. Use price is flat. As nobody allowed to see this pre-market. What happened during overnight today's trading, but use markets and global markets as such has been trying to break out. Let's look at the Dow Jones futures. It's on a descending wedge, and then it's almost, you can't say that it is completely done with the breakout, but looks like it's starting to move up after taking a reversal and taking a support. It's spiking up and trying to break out that descending edge. That's the same thing that's happening in the Nasdaq as well as the S&P 500, which is good. But if it sustains, and if so all eyes will be on that. You never know what happens. If it again falls into the resistance and falls down, it'll be trouble. But some Fed events are coming next week, so let us keep a close watch of those as to if big moves are happening, or it's going to consolidate into place. So that's the indices. Some inflation-related data, Fed speeches, jobs data, and all is coming on Wednesday, Thursday, Jan 18 and 19. So that will breed some volatility as if markets react to that. To stock picks, PNB and Federal Bank. National Bank is a long call, and Federal Bank also is a long call. The reason is very simple. It's a breakout from a rectangle pattern. It is having a momentum bullishness and also a divergence, which is bullish in nature, post reverse divergence, and trend is also rising on the weekly as well as daily charts. So good breakout, and it can be both vertical as well as short swing trades. It can be rewarding. Federal Bank results that come today seems to be good, and that is also having a good pattern, rounding pattern, a very long rounding pattern, and it has broken out and it's pulling back a little bit and then trying to further move. The momentum is bullish on weekly and daily. So is a trend as per the ADX indicator that shows. So PNB and two banking stocks, one is private and one is public. Both are good stocks for position as well as long term. So this is the answer for Jan 17 Tuesday tomorrow 2022, and then having studied all these parameters, let's wrap it up today. Both got trapped, that's for sure. That's when it got the hit by the resistance, and we're still in the crucial support zone, right? Which was previously a very crucial resistance zone from where it broke out and made the all-time high hypothesis. Now it's a support zone, very crucial support zone, and it has been retesting its zone since long. But given the price action that's below the moving averages, positive bands having downside bias, momentum falling, momentum trend indicators bearish, FIs continuously above selling. Sorry about that spelling. Continuously selling. Rupees weak, and use markets at the verge of a breakout, but at a resistance zone. Basically, it's not confirmed yet. So there are all these reasons. Maybe for the next day is mild bearish. Continues to be bearish for us since the charts is that's what it has been talking about. At the same time, keep in mind that we are at a very crucial support zone, which is fluctuating also previous resistance. Now CIP bonds, its possibility is there. Divergences and volatility, momentum divergences on the short term is in favor still. Which is no longer in the lower regime. It is not ready to further go down below the 40. That means there is something that worries, right? So if it spikes by about the 20, got short portion size, and manage your risk is what you can do. And levels to look at is 7,500, 18,300 on Nifty, 41,500 and 43,000 on the Banknifty in the short term. So as I say, always hedge your position, protect your capital, manage your risk. That's all I have. Bearish view, mild bearish view for the next day. I hope this helps you in some way in your it has brought in some clarity in your trade plan for the next day. If it has helped you that way, or some way, if it has helped, please don't forget to subscribe. Share to your friends, please, and we have very few subscribers, and I appreciate to have this lot. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.